All right, guys, welcome back for another video. Hope you guys had a good weekend. I just want to cover the weekly close and also talk about a little bit about the broader markets. The reason why I typically cover the weekly close on Monday morning is I want to cover it during the New York session and see how the broader markets react to that Sunday close. Again, the traditional markets are closed on Sunday, so I do want to look at that the Monday open in New York open. And we can see that price in the equities market, this is the S&P 500, the broad U.S. equities market, has gapped up a little bit higher. So we are seeing that bullish confirmation. Now on the weekly chart, we'll just start from the high time frame on Bitcoin. Again, I had framed a trade idea based off a retest of the previous all-time high. Now I won't go into the extreme details of that. I covered that in previous videos, but basically you got to test down at that level. Buyers stepped in, rallied back up to this level right here, sold off a little bit. Then we sold back into the all-time high, and that's where I actually entered my position. And now we're rallying off that level, which is further confirmation that area is support, not just a line on the chart. And I actually opened a 312 Bitcoin position down here, roughly at 19,400. And again, so I just want to run through some of the price distinctions that, and kind of focus primarily on price. In the previous video I uploaded, I covered RSI and capitulation, kind of formed a bias for, the type of signatures you see come in at support that lend credence to the idea that, this is a major macro support. We already covered that. So in today's video, I'm just going to cover some of the broad price action videos, price action concepts. So here I've marked off the quarterly open right here. So we get a quarterly open in July 2022, the opening of quarter three, Q3, and then we get a break of structure. Here's just a basic price extension fill, right? Came down, you get your last capitulation push down into the all-time high, at least actually a little bit further than the all-time high, and then it rallies back up, fills this price extension, rallies back down into this level around the quarterly open, then you get a new quarterly open. The trend breaks. Typically the quarterly open is an area where it's very common for there to be a change in market behavior, and that's exactly what we see. Comes up, runs for liquidity above the high, which is a change of behavior. Now that liquidity's ran above the high, you have a break of market structure. You have higher highs, and then come down and you start defending the lows. So you could also, put a check mark right here as well. And then you get a little bit more aggressive, whereas this one came all the way down to the lows and defended. Then you get more aggressively higher lows, right? So this time, this anchor is based off this high right there. So you get a rally far above the higher high as opposed to this one right up there. Rallies down into a 618 perfectly. Rallies up, runs for liquidity above the highs right there. Kind of bases off here, sets in a low. This is your low of interest. This is the low you can mark off right here. When price broke that, that's your break of structure. That's sort of the basis you had for further continuation. Now, if you were to put, moving averages on the chart, let's see if we put a 21 exponential and a 34 exponential, you can see that after structure broke, you get your EMAs crossed to the downside, and that's your signal for a further continuation push down into this base down here. We see price action, make one push and then a second push, and then put in your bear trap down here. And then you get the volume that comes in significantly right there, pushing above this consolidation. Now, if we go down to a 4-hour chart, you can see on this side, typically price would react off some price distinction like this, right? A consolidation, at least briefly, right? But instead, it just kind of pushes down below it and then just rallies right up through it without really offering any price distinctions at this level. That's generally a sign that, the higher time frames are operating, right? And this is a trap area, right? Now, it's obvious in hindsight, but, again, it's just a sign that, things are happening on the higher time frames. And, getting caught up on the lower time frames at a high time frame area is generally not a great move. Again, we kind of, highlighted this as, the greatest capitulation in Bitcoin's history ever in realized losses terms, also testing the previous all-time high. So we're at very historically significant levels. So it's really not the area to be looking at a 15-minute chart. You want to, take a step back, have an appreciation for the volatility that exists in the market, and not getting too in the weeds with everything. Because ultimately, we do see, price came down there, and now this is an interesting distinction. We actually have a higher low on the weekly, right? So a lot of people who were getting bearish here were, they were basing their bearishness or using a justification for their bearishness off the fact that we have a high time frame downtrend, which, they're right. Technically, we did. You have a series of, you know, uh, lower highs, lower lows. But, now we have a different behavior, right? The weekly set in a higher low, just barely. Um, Again, it's not extremely significant, but it is technically a higher low. So in order to have a textbook downtrend, you need to have uh, a lower low and lower highs. You need both of those to have a textbook downtrend, right? And if you don't have that anymore, then it's not a textbook downtrend. We don't have that. We had a downtrend briefly on the daily. That's obviously broken. Now it's not a textbook uptrend either because we need a higher low, right? We don't have higher lows either on the daily or the weekly, right? We have a lower low and then a higher high breaking above these highs right here. The weekly as well. We don't have a higher high. So we don't have a textbook downtrend or a textbook uptrend. What we have is a textbook break of structure around a high time frame level in an area, where, uh, again, we don't want to be too in the weeds with things. Now, if we go down to the daily chart, I just want to show that this area, I haven't really taken position or profit on this position, but, we've ran into this level right here. That's generally a good area to take profit. This is a break of market structure, but not only is it a break of market structure in the sense that it can tell you that, to expect lower prices. Again, not forever, but you did see this break of structure. You got one push and then, one push here, a second push and a third push, 3 drives, and then break up into that level. Now, these have staying powers in the sense that they're very significant. We want to mark them off on the chart. And then when price runs up and tests back into that level, generally that's going to be a good area to take profit, to pull in profit on the position. And that's actually what I'm going to do with this position right here. So I won't do it during the video live, but as soon as I close the video down, I'll put in those take profit orders and generally just look to manage risk on this position. Again, manage risk and profit, because this area is a very classic level where, price, even if price doesn't, necessarily top out here, typically offers some type of reaction. Of course, there's no guarantees. Price can push higher, but that's why I'm not managing. It's just a small fraction of the position and building a hedge. Again, you can see this position is already very deep in profit. The account equity is actually up at 3,480,000, which is actually an all-time high for this account. So I'm really happy to have this good entry down here. So again, probably the most nuanced element of position management is taking profit, and taking profit in a way that doesn't, it's not trying to pick the intermediate top, right? To doing it in a way where you have multiple take profit orders and multiple price distinctions, so that as price moves in your favor, you're pulling in profit. It's just it's just the most optimal way to interact with the market. So I'll be putting in those orders soon. And yeah, if you guys like this content, just leave a like on the video below, subscribe to the channel, and stay tuned for more uploads.